G'day everyone, and thank you for joining us for our 2021 Open Banking and the Digital Financial Services Environment E-Series here in South Australia and the Northern Territory. I'm Mark Windrum, the West Coast and Central State Manager at the FBAA, and I'll be your MC for today. Now, this is our first eSummit for 2021. This will run over today and tomorrow's sessions with beneficial content for you to take away. So please do share your webcam so we can all see your smiling faces. We do enjoy seeing a little bit of interaction, and certainly our presenters will as well. Now, for today's session, let's get started. There will be 1.5 CPD hour points allocated to each eSummit session today. So that'll be for today and tomorrow. So you get 1.5 for each. You'll receive an email with the CPD code and survey following. So please tune in throughout the whole webinar to ensure your attendance is marked and to receive this. We'd like to thank our sponsors for their support. It's been a tough year, a tough 18 months, and yet they continue to work closely to ensure that we can still provide you with the education assistance you need during this time. So please don't hesitate to get in contact with them, as they're always there to support you. You'll get their contact details in the follow-up email after today's session. Now, members, don't forget that you will receive 10% of your membership back every time you refer a new member who joins the FBAA. We do have our FBAA app, so please download that from the App Store or the Play Store, and then you can easily access information, updates, and upcoming webinars to register for. Members, please continue to access the members area of our website as well. Now, it has had a refresh in the last couple of months. It looks a lot better. It's a lot easier to navigate, so please do check that out when you can. We do still have our broker support program available as well. We have actually updated that with our BID digital education testing course. So please access that if you still are interested in learning a little bit more about BID. If you're just new to industry, it might be very beneficial for you. Now, today's agenda was sent through the registration link, but it is also on the Zoom chat box as well. Now, to commence today's session, we will be hearing from the Senator, the Honourable Jane Hume, with an update on open banking and digital financial services environment, what the government is doing and planning for the future. So we'll hand over to Jane Hume now. Thank you.
Hello everyone, and thank you to the Finance Brokers Association of Australia for the invitation to speak to you all today. A lot has changed in the past year, but buying a home is still one of the most significant financial decisions that Australians make. And it can be daunting, and I want to recognise the role of brokers in matching borrowers to lenders, advising on loan application processes, and negotiating interest rates. Australians are increasingly recognising the value of mortgage brokers to help them navigate the world of purchasing property. In 2003, mortgage brokers accounted for just 25% of total home loans. Now today, that number is 60%. Demand for services will continue, and recent Royal Commission reforms will only enhance consumer confidence in your sector. It's also inevitable that technology and innovation will play a greater role in future. And I think that it's terrific that the Finance Brokers Association of Australia has devoted today's webinar to open banking and digital financial services. As Minister for the Digital Economy, I am passionate about the benefits of open banking. Now, it's still early days, but the Consumer Data Right will revolutionise the way consumers, both individuals and businesses, use their data to compare prices, switch products, manage their finances and cash flow, and streamline banking product applications, including loans. I'm equally excited about what this means for the growth of Australia's fintech industry to deliver innovative, data-driven solutions that improve Australians' lives, drive competition and productivity gains across the economy. Australia's journey towards the Consumer Data Right, the framework that underpins open banking, started with the 2014 Financial System Inquiry, which recognised increased data sharing could improve financial services outcomes. Now, this was followed in 2015 by a competition policy review, which recommended improving individuals' access to their own data to better achieve consumer outcomes. The evidence base continued to build. In 2017, the Productivity Commission's inquiry into data availability and use proposed the creation of an economy-wide comprehensive right to enable consumers to control their data. Now, at the time, the Productivity Commission said there is enormous untapped potential in Australia's data. Everyone, including the government, agreed. In the 2017-18 budget, we announced the introduction of open banking and commissioned a review to recommend the best model for Australia. The government subsequently announced in its response to the Productivity Commission's inquiry the creation of the Consumer Data Right, an economy-wide approach to data portability, implemented first in the banking sector and soon to be followed in the energy and telecommunications sector. The Consumer Data Right was viewed as a game changer from the very start. While modelled in part on the open banking regime in the United Kingdom, the Australian framework was established with a founding principle of universality, which, among other things, put Australia at the fore of data sharing regimes globally. It meant that it was designed with economy-wide application at its very core. The Consumer Data Right framework enables consumers to safely, efficiently and conveniently harness their own data and information held by Australian businesses for their direct benefit. The framework will enhance data-driven innovation and make products and services more affordable by putting downward pressure on prices as a result of increased competition and greater choice. Importantly, a fundamental design feature of the Consumer Data Right is robust privacy and security protections, which will help build trust and confidence in the system. Now, these protections allow consumers to control what data is shared and with whom and for what purpose, and when it must be deleted. Now, open banking launched on the 1st of July 2020. It started with the Big Four banks, ANZ, Commonwealth Bank, NAB and Westpac, providing access to certain consumer data. And this included data on savings accounts and credit accounts. From the 1st of November, the Big Four started providing access to mortgage and personal loan data, followed by lines of credit and trust accounts in February 2021. A number of businesses that help consumers to make the most of their data have become accredited data recipients, or ADRs. And we expect the number to steadily increase as the rollout progresses. We are also now seeing banks also choosing to become ADRs, with Regional Australia Bank and the Commonwealth Bank of Australia becoming accredited, and more are expected to follow. The next milestone is fast approaching. Starting from the 1st of July this year, 12 months after the Big Four banks, the rollout of open banking in the non-major banks is set to occur. Now let me step through how the open banking process works in practice. Under the Consumer Data Right framework, there are three main parties in open banking. First, there's the consumer, an individual or a sole trader business. Second, there's the data holder, a bank. And third, there is the accredited data recipient, or ADR. Now this could be a budgeting app, for example, or a rival bank, but either way, they must meet stringent accreditation criteria, including information and security and privacy requirements. The future applications of the Consumer Data Right are endless. A customer could direct her bank to share her data to an innovative ADR, say an app, which might be able to help her find a better deal on her financial products and services based on her individual circumstances. And as the Consumer Data Right is implemented in more industry sectors beyond open banking, now that customer could eventually use the same innovative application to get a better deal from energy and telco providers and beyond. At no point does the customer need to share her banking login details or her password to do so. The customer is provided access to her data in minutes rather than in weeks, and she can share her data easily with other accredited data holders or recipients. And importantly, the customer has control of her data throughout the entire process. She can view and manage and withdraw consent for data sharing, as well as ask for her data to be deleted when she's done. In January 2020, an inquiry into the future directions for the Consumer Data Right commenced, led by Scott Farrell. The government asked the inquiry to consider options to expand the functionality of the Consumer Data Right. So this included how it could be expanded for consumers beyond just choosing to share their data and towards applying for and managing products, including by initiating payments. It also examined how the Consumer Data Right could promote innovation through the creation of products and services that are mindful of the needs of vulnerable consumers. And importantly, the inquiry was asked to identify how the CDR could enhance consumer, business and economic opportunities. The inquiry came back with 100 recommendations, and the government will respond to that report later this year. Providing for deeper functionality alongside the government's accelerated expansion to other sectors puts Australia at the cutting edge of digital and data-driven economy. During COVID-19, Australia vaulted forward in digital adoption for both consumers and businesses, and we now have an opportunity to keep that momentum going right across the economy. And that's why the government is investing almost $1.2 billion in Australia's future through the Digital Economy Strategy. The Digital Economy Strategy provides a roadmap to grow Australia's future as a leading digital economy and society by 2030. As part of the strategy, we have committed $111.3 million to strengthen and expand the consumer data right economy-wide. Now, we've already commenced implementation in energy, and we've announced telco will be designated as the next sector. To inform the sequencing and the prioritisation of an economy-wide rollout, Treasury is also undertaking a strategic assessment which will inform a roadmap for implementation. It will also expand Australia's international influence to establish an interoperable and rules-based approach to international consumer data portability and sharing frameworks. In the new area of open banking, Australian fintechs have a chance to seize on opportunity. It's an ideal time to innovate and expand as people look for new ways to manage their businesses and personal financial affairs. We have a tax and regulatory framework that supports innovation. We have the enhanced regulatory sandbox in place. We've introduced restricted authorised deposit-taking institution licensing regime to reduce the barriers to entry into the banking sector. We've established the equity crowdfunding regime to expand access to finance for startups and early stage businesses. And we've established the UK-Australia FinTech Bridge, and that's our intention to negotiate a new bridge under our digital trade agreement with Singapore. And we're not stopping there. We'll continue to look for exciting opportunities and to encourage and support startups and industry to support Australia's economic recovery and spur it on. So, I'd like to thank the Finance Brokers Association of Australia for hosting today's webinar. The Morrison government believes that data is critical to building a modern digital economy and to delivering better outcomes for all Australians. Open banking and the consumer data right is just getting started. We understand the idea of letting money work for us with investments, but imagine if we could do the same thing with data, where consumers let their data work to their advantage and consumers trust that their data won't be misused. So this is what the future of the consumer data right could look like as it expands. Thank you.
Well, look, thank you very much to the Senator for that. That was very interesting to hear about all the exciting things that are already in motion in regards to our industry. And I think there's a lot of things that our brokers are going to be very looking forward to make their jobs a lot easier when it comes to lodging through the banks with any luck there. Anyway, fingers crossed on that. Now, next I'd like to welcome Kerry Sainsbury from Credit Fix Solutions, who'll be outlining how credit impairment impacts the process flow and getting the appropriate applications approved by online lenders. Now, over to you, Kerry.
Thanks, Mark. Interesting about the open banking, isn't it? Probably a good segue for me to have a little chat about it.
Absolutely. Well, look, it's already been in the credit reports essentially for a little while, hasn't it now? So
yeah, it's just going to get a little bit worse. Everything will be on there. Thanks, Mark. For those of you who don't know me, I'm Kerry Sainsbury from Credit Fix Solutions. I've been in the industry a good 20 years now. I've been a BDM for 10 years now. My first BDM role was with a specialist lender, and that's how I came about Credit Fix Solutions. So I had a friend that wanted to become a broker. Now, normally, if that friend wanted a mortgage, I would have suggested a higher rate with that specialist lender. But because he wanted to become a mortgage broker, I actually had to do some homework and research it. So that's how I came about Credit Fix Solutions. So initially, I went to a competitor who quoted us 10 grand for 3 defaults due to a divorce. And then I went to Victoria Costa, who is the CEO, and at the time she was $9.90 was the fee. Our fee is a little higher now, given that was about 8 years ago. But that's our whole product, so it's no win, no fee. And I've now been with Credit Fix Solutions for 2 years. There's now 4 of us BDMs. I know initially, and I get this question a lot from brokers, so I'll bring it up. I know initially I was told when I was working with a specialist lender that credit repair was quite tarnished. And I still think that is the opinions of a lot of brokers, lenders, etc. Sorry, and my children are just walking in the door because it's school holidays. Get out. Lovely. Sorry. And that is the opinion of the brokers and lenders that this is tarnished. And so I guess it's great for me to represent Credit Fix to show the industry that this can work and change, change customers' life. If we can repair their credit, if we can remove the late payments, if we can take off some inquiries, we can remove the default. The credit score is instantly lifted. We're looking at legitimate errors and loopholes in the Credit Reporting Legislation and Privacy Act. So it's legitimate errors and loopholes. Credit report is basically repaired and we can go back to the lender. So it definitely works and it's definitely an option. I know I've spoken to a lot of brokers and we can potentially save sort of $10,000 just in interest rate. Looking at comparing from a 7% down to a 3%, it's 10 or 20 grand a year that we can save in interest. In terms of the question I've got today, how we can impact the process flow, I guess there's 2 options for customers. So it depends how emotionally connected they are to the property. They really want that property, so the broker's got no option but to put it in a higher rate and then I guess work with them on the journey to then, in 12 months time, lower the rate and we repair the credit. Or they can wait 3 to 8 weeks, which is our process time. We can remove that impairment. They'll have to search for another property, but they're back to a sort of a 2% rate. So definitely a couple of options there on how we can impact the process flow and improve it. CCR as well, I know that I just wanted to mention that after that last presented that there is no hiding anymore. As we know, HEX debts are due to come onto CCR, utility bills. There's no hiding, I guess. But again, if everything's paid on time, it's fantastic for the, for the broker and the lender to know it's all on there. Upfront checks as well. I'll bring that up as well. The amount of brokers that I still speak to that aren't doing upfront checks, I definitely personally would advise to do an upfront check, especially with the Equifax report. If the Equifax report has a few blemishes on there, then I would suggest also doing checks on the 4 credit reporting bodies, which would be Equifax, Experian, Alien, and then you've got Creditor Watch, which is the new company credit reporting body as well. We do have ebooks. We're all about value adding and providing any templates, data, any sort of information that we can add to you so we can educate the customers before it comes to finance. I guess the amount of I guess you don't receive that advice or education when we're in school or unis and TAFE, so we can educate our customers before it comes to finance. Then we can definitely assist. Debt negotiation as well, that's another one that I have a few questions about. So normally it's the broker calling me when the customer has gone into a Part 9 or 10 agreement, which is a form of bankruptcy. Remember that with 30% of the cash up front, we can negotiate those debts down on compassionate grounds. Always a good option, I guess, so we can avoid bankruptcy, as the customers just don't realise that they're a little bit, they're affected for life, I guess. That's probably just the buy now, pay later schemes as well. Remember that 150 points on inquiries. We do have some great contacts now to remove those inquiries on the grounds that they basically weren't aware that it was going to impact their credit report. So normally roughly 70 points each inquiry we can remove. So if we've got a credit score at say 550 and we're just looking to bump that credit score up to 600, it may just be that one inquiry that we remove can save that customer. So hopefully that's just a few hot tips please send me an email or give me a call. We're happy to health check any credit report. Again, we're no win, no fee, so nothing up front. Doesn't hurt to give me a call and just to check if we can repair it before that customer pays that higher rate. Thanks, Mark.
Thank you very much, Kerry. No, thank you. So just a couple of quick questions I've got there. I didn't actually realise about the HECS potentially going on. What's the progress with that at the moment? Because that's obviously Big Brother, the Australian government being able to get involved with people's credit report there.
Yeah. I mean, this was always in the plan. I guess it's just the process. It's all in different stages. But eventually, I mean, we're basically looking like we're becoming the UK version of the credit reporting system. So they're at 40, 50 pages per customer. So eventually everything will be on there. Yes, it's great if a customer does pay everything on time, because positive credit reporting obviously improves that negative data score. So it's a great thing if everything's paid. But my issue, as I mentioned before, Mark, is that the education piece is not there for our customers. So it's when they have a few late payments or when they don't pay their HECS debt, that's when, and then they're going for finance, that's when they finally realise that there's no hiding. So I guess it's up to us to educate before it happens.
Education. Absolutely. There's no proactive education still, and that's the whole point of what we love to get you guys on for, is because you can provide the education through the brokers that can then hopefully then feed it on to their clients from there. But it's a very slow process, unfortunately. And just the other one, you said at the start, it sometimes gets a bit of a bad rep. The industry is now regulated. How's that going at the moment?
Yeah. So we've already received our approval for ASIC approval, which is fantastic. Excellent. I know Victoria was very stressed about that. I think personally, and this is my personal opinion, I think this is a great thing for us, because I guess for me, a lot of us in the financial professional sort of industry, we're very, regimented. So if it's not put into our process, we don't do it. And so credit repair has always been an option, but it hasn't been put into the system as a process. So I feel like now we're regulated, it's going to change things with aggregators, that it needs to be an option to look at us first.
Yeah, excellent.
So it's a great thing. And as I said before, there are some competitors that are charging up front and not doing the right thing by the customer. So I think it's a great thing for us and the industry.
Yeah, well, that's it. And the worst case scenario is it's a no, but it's a free no, as you said. And at least you guys will have a good look at it and go, if there's a chance, we'll go ahead. But if it's a no straight away, well, at least it's a quick no as well.
Yeah, exactly. And an education piece as well, if we can help as well.
Absolutely. Look, thanks very much, Kerry. Appreciate your time.
Thank you. Thanks, everyone.
Cheers. See ya. Cool. Now, next on the agenda, we've got a panel of experts talking about bank SLAs and loan application process that I'll be the MC for. So we have Andy Cusworth from Finstro, we've got Cam Garnham from Strive, we've got Ben Starkey from On Deck, and we've got Danelle Brooks from Lend. So how you going, guys?
Hi, Legend. Very good.
Morning.
Morning.
Doing well, thanks.
Well, thanks very much for your time, guys. Now, look, we'll just start off with you, Cam. You're my top left, so we'll start off with you. What is about your product that sets you apart from other SME lenders, mate?
Hi, Champion. Thanks for having us. Loose use of the word expert and coming to me first.
Well, I know. So I did want to stay professional just for a moment.
Yeah, I would have liked you to start on someone a little more professional, maybe Starkey or Donny. But
anyone else?
Anyone else, probably. Mate, we do short-term business and investment lending. We've been with you guys for a number of years now. And I guess a couple of things, I forgot the question, but I think it was what sets us apart in what we do. I guess at the end of the day, mate, we solve problems for clients, and whether that's a 2-week problem or a 6-month problem, we can fix those problems without charging them anything up front. I guess that sets us apart from a lot of the short-term lending. And like Kerry was just saying, in the credit fix stuff, in the short-term lending, it's very similar. It's that real grey area where people are really concerned about playing in that space. With us, there's no upfront fees or charges. There's no application fees, establishment fees, anything like that. So if your client doesn't get any money from us, it doesn't cost them a single cent. We're the actual lender. we make money out of interest. We only make interest if we lend your clients some money. The other thing, I guess, that sets us apart, we're a small family-run company. My little sister's the in-house lawyer, and we can genuinely turn stuff around within 24 to 48 hours. A lot of people will promise that, and then they have solicitors that have to do their documents, which take days, or they want valuations done or what have you. Because it's our money, our in-house process allows us to be very quick when we turn our stuff around.
Cool. Thanks very much, mate. We'll go over to you, Andy, at Finstro.
Yeah, thanks, Mark. So for us, specialising in the SME space, one of the things that we're very good at is we'll work with businesses that have only been in business 6 months. So we get a new start businesses coming to us. As long as they've been in business 6 months and they've got an ABN number and GST, we can put a revolving line of credit in place. The benefit of the revolving line of credit is they can access a multitude of our products at any time that's suitable for their business needs, but they only ever do the application once. So for brokers, once they do that first application and they're in the system, the client can keep coming back as many times for different products, don't have to reinvent the wheel, don't have to repeat the application. And the big benefit for the broker is it remains their customer for life that they're with us. So they generate trail commissions every time they come back and use the facility. We're also one of the very few financiers that offer import finance. So we can pay any invoice around the world in any currency without security or insurance, to the point where we're actually working in partnership with some other financiers in Australia. We'll finance the import part. Once it lands in Australia, we can then be replaced by another financier of their choice. So again, collaboration, we're happy to do. It just gives us that flexibility.
That's great. Awesome. Thanks very much, mate.
Thank you.
Over to you, Ben.
Yeah, thanks, Mark. I'd say the main thing that sort of sets us apart from other SME lenders, I mean, everyone sort of has a similar product in terms of speed access to funds and low documents. In terms of what sets us apart, I'd say it's probably the security piece. So we have the ability to go up to 250,000 completely unsecured. So we won't place a hidden caveat into the contract above a certain amount. We can go from 10,000 to 250,000 unsecured, I think, which is a it's really niche in our market, which is good. The other bit I always harp on as well is probably our average loan size. So our average loan size is actually sitting around 75,000 at the moment, quite a bit higher than the other SME lenders. I think it's just speaks volumes about a predictive credit model. Just allows us to give small business a higher amount.
Cool, thanks very much, mate. And Danelle, obviously you aren't an SME lender per se, but you are a billion SME lenders, aren't you?
That's it, mate. We are the collaborator, connector. Yeah, look, what we do at Lendmark is connect, obviously, brokers, which in turn connects Aussie business owners to, for a start, all these guys that have spoken today. So Andy and Cam and Ben. And by using our technology, we actually, through one application form, can actually connect our applicants to, up to 60 odd lenders. So really it allows them to, and it's that old terminology about working on your business rather than in your business. We're really trying to do that heavy lifting to help guide brokers to transact commercial finance. It's not the scary beast that it's always been. And finally, we've spoken about diversify and pivot and all these words in the last 3 or 4 years, but we really are now actually seeing a shift on resi brokers focusing on commercial. And so, look, we're here to make that job easier and reward brokers with 100% of the commissions, which is certainly something like Kerry is, we're certainly second to none as far as how we remunerate our brokers.
And you make a very good point there, Danelle. I mean, I think 100% of every single event I've been to, whether I've just been in the audience or emceed it like this one, has been that don't get scared about doing anything SME related. If you're a resi broker, it means you've got the ability to write an SME loan in some capacity. Just chat to your BDM; they'll be able to be an absolute massive source of information. So, please take that advice as well for sure. Now, I'll go over to you, Andy, because you mentioned in your startup there in regards to, well, it's actually a startup in my question, which is probably why I said it, but we've got a startup company that's been trading for 6 months but has a high income of over 100 grand already. What would be the maximum amount I could borrow and what documents would you require? Now, that could be how long is a piece of string, but just give us a bit of an idea, because obviously you can do the 6 months. What type of things would you be asking for?
Yep, so we will advance 150% of their turnover. So in this case, if it's 100,000, then 150,000 against that business. Normally up to 100,000, very minimalistic, which is 3 months bank statements and the normal 100-point ID. So for that scenario, very quick and easy and minimalistic.
Okay, cool. And there's no kind of extra information that you need to kind of have projected figures or anything like that? It'd just be pretty simple, as you said.
No. Not until we go over 100,000, then we ask for financials.
Okay, cool. Thank you very much. What about yourself, Ben?
Yeah, so 6 months in business, we can't unfortunately do. So we need business to be trading for at least 12 months before we can do an application. There are some times when we can make exceptions. So say if customers obviously change structure, so operating for a sole trader for 3 years, just changed last month to a company or a trust structure. Then yeah, we can make exceptions based on that. We just need to do a bit of digging, just make sure it's still the same business trading. But yeah, apart from that, it's a little bit trickier if they've only just started less than 12 months.
But the time in the new structure, that can just be a matter of a couple of months still. So that's good. Excellent. Thanks very much, Ben. And Cam, what about yourself, mate?
Mate, listen, we can lend to 1 day old PTY Ltd companies, so they can be brand new startups. The reason being is that we don't look at financials or bank statements or tax returns. Unlike the other boys, we're lending against security. So depending on what security they've got to offer, whether it's a residential property, their principal place of residence, that they have a mortgage with CBA on, that we can have a second mortgage on, or what have you, we're lending against that security piece. Rather than against their current trading history or how long they've been in business. So it would depend what security they had to offer.
Cool. Awesome. And it sounds like, as in everything, just have a chat to these guys if you do have anything about that. And now we've got Mr. Smith here, who's managed a restaurant for over 15 years and has decided to go out on his own, buy his own. He needs finance for fixtures and fittings. Is this something you can look at? And is there any other finance you can offer him? Now, Cam, I guess that would mean if he's got, have a sip of water, very well-deserved piece of water there.
Nicolette, so proud of me. Look at her smiling in the top corner, drinking my water. Listen,
I guess if they own the restaurant,
same answer. Yeah, same answer on that one, mate. Listen, again, depending on what security they were looking at offering, we don't lend against the chairs and the tables and the equipment of the restaurant itself. So at the end of the day, it would need to be some sort of property security that the directors owned that we could look at.
Andy?
Yep, so on that, with the revolving line of credit, we've got a few options there actually, Mark. So with the fixtures and fittings, if he's got one large invoice, we can actually pay that invoice for him. If he's got a lot of smaller invoices or trades, then we can give him cash out to pay individually, or we can do a mix of the two. We can pay a couple of big invoices for him and then give him cash for the smaller trades or at different times. So yeah, various options for them.
Thanks very much. Ben?
Thank you.
Yeah, so similar to my last answer, sorry. If he's looking to just take over or start up a new business venture, then we wouldn't be able to do it. But say if he's been employed by or if he's trying to take over the restaurant that he's currently managing, and we can prove that he was the main man or responsible for the day-to-day operations of that restaurant, then we can look at doing say like a shorter term loan.
Cool. Thank you very much. Now, Danelle, if you've got someone that wants to use the Lend platform, what would the process be actually putting this into the system?
Yeah, thanks, Mark. And look, it's quite easy. And obviously, you know, we've got Andy who can look at startups. We've got Cam based on security and other lenders who can do that too. But sort of to tie in, I guess, from our perspective on a startup business versus purchase an existing business, there's quite a clear definition, and there's probably just a couple of really quick educational tips that we can give to brokers that are watching today on how to determine whether we can finance those deals. A lot of people put their hands up in the air and run for a mile if they hear the word startup. And we really need to look at, you know, the industry experience. So if I, Danelle Brooks, as a finance expert, go and decide to buy a cafe, am I going to get finance? Probably not. Maybe if I use my property as security. But if I was, you know, looking to purchase an existing brokerage, for instance, then there would certainly be more lenders who would be looking at supporting me because it's industry related. So, excuse me, don't shy away from and we're just waiting on the COVID announcement in Queensland, everyone. So don't worry, you can't catch it down this Zoom call. Even though Cam's got it already. But look, there's just some really important questions to ask. So please don't shy away from the startup question or the purchase existing business. Definitely ask a few questions to.
Yeah, so we've had to mute just a couple of seconds too early there, and I think we've got half of Queensland now coughing. That's excellent news. I'm in Perth and we just went into lockdown, so I'm in my little bubble now, which is good for everybody as well. Now, we've got another question. I might just not go to the Queenslanders on here. We've got someone who needs finance of stock and he needs it next week. Okay, but some of his accounts that are due to pay him are running late. Would you look to still finance him? And if so, on what terms, Ben?
Thanks, Mark. Yes, that's probably our ideal scenario, really. So we do have an extremely fast turnaround time, so we can generally get an answer for you within a few hours. So a week's not an issue. In terms of the accounts that are overdue, so for applications, all we collect document-wise is just the last 6 months of business bank statements. So as long as they are still making money to be able to service the loan, then yeah, I can't see any issues with this one. But yes, stock is probably one of our most common scenarios that we do see. In terms of the loan amount for what we see on the statements, we generally approve around 120, 150% of what we see in the bank statements. So as long as there is still some income coming there, yeah, not an issue.
Cool, thanks, mate. And Cam?
Yeah, listen, again, we do a fair bit of stuff for stock. We don't look at the bank statements, obviously, to see what income they've got. So we want to see an exit strategy. So really, really important with our lending on how is the client going to be able to pay that money back. Because as I say, we're not going through BAS statements or bank statements. So if they're purchasing stock, typically that stock is going to be sold at a profit. And if they're selling it, I always use my bottle of water story. Nicolette, you'll love this. But if a cafe is buying a bottle of water and it costs them $1 and they're going to sell it out at $2, if it takes them 6 weeks to do that, it might cost them 6% to do it with us, but it means that the bottle of water has cost them $1.06 and they've sold it at $2 and they've still made a profit of 94 cents. So that sort of stuff is right up our alley, again, depending on the security that they're able to offer for that lend.
Well, I think we've lost Andy at the moment. So, oh, there he is. No, he's just gone on a different live. There you go, mate. And
yeah,
did you hear the question?
As soon as Danelle mentioned COVID, it suddenly just dropped out. So there must be the government monitoring. I'm back now, so apologies, Mark. Which question are we up to, mate?
Yeah, sorry, mate. So we've just got someone who needs finance stock that he needs to have next week, but some of his accounts are due to pay him are running late. Would you look at still financing him?
Okay, so in that respect, both ends of the coin, really. We can actually pay his invoice for stock now, so we can pay that straight away for him. But we can also help him with his accounts to come up to date if the late paying him by actually paying his account. So we can also offer him a mix of creditor and debtor finance there. So both ends, we can pay his creditors, we can pay his debtors, and if he wants some extra cash for cash flow, we can give him that option as well.
Thanks very much. And Danelle, from your experience and your knowledge of all the different products that are out there, is there a wide range out there at the moment to be able to assist with this?
Yeah, look, Mark, I think it's really important, and we're seeing a lot of it in the market now, where we're seeing a lot of combined product type scenarios. And it really actually is able to support the business in, a short 120-day facility where they're, rolling over their debtors and they're on payment terms versus that longer term, either line of credit or small business loan. So we're actually seeing a lot of combination. So people who need a lump sum of money right now, versus someone who may want to access funds over the next 2 or 3 months. So I think it's really important to understand that, you know, it's not one flavour ice cream anymore. You know, for so many years in the alternate market, the first big thing was unsecured lending. And as everyone knows on here, the rules have changed a lot. There's a lot more products. And again, that's certainly something that we can help you with at Lend. You know, we are completely agnostic when we work with over 60 lenders, and we're here to help brokers find the right solution for their client. So as I said, it may be that you need to go to Ben because the guys that on deck will do a larger loan volume, or it may be that, again, you access you know, 2 different products with a team at Finstro to get the right solution for your client. But it is out there and it is easily accessible. It's just about having someone hold your hand and guide you through the process.
Lovely, thanks very much, Janelle. Now, this hopefully will be a quick one, although you can take some time if you like. Being that we're almost at the end of the financial year, will anyone lend for ATO debt? Cam?
Yeah, mate, as long as it's company or business related ATO debt, not personal ATO debt. But yeah, most definitely we can give cash out to fix up their ATO portals.
Cool. Ben?
Yeah, we can. Our general rule is for the ATO debt not to exceed 10% of their annualised revenue. But anything beneath that is, yeah, more than okay.
Very good. Cool. Andy?
Yep. We can lend for the ATO tax debt, and we can either lend outright and pay it outright, or we can look at releasing some funds from other invoices and use that. So either way, answer is yes to ATO tax debt.
Thanks. And Danelle, have you got any kind of little nuggets of information you think on that?
No, the boys are doing a great job for me this morning. I can just sit here and keep sniffing on my doTERRA product placement flog there. Will stop me from coughing, but I reckon Nicolette will like that I'm using doTERRA oil as well. But yeah, look, obviously, yes, there are plenty of options. Ben's rule typically in the unsecured space is how a lot of the guys will look at it. So no more than 1 month of their revenue. So to put that into numbers, if you've got a client who's turning 100K a month and they've got 100K ATO debt, that's quite easy to place. Where we find it difficult is if you've got someone who's turning 100K a month and is sitting with a $500,000 ATO debt, then, you know, yes, there are still options, but they're going to be a little bit more difficult. So yeah, thanks again to the boys. They're all on the platform, so the answer is yes.
Thanks, Danelle. Enough about doTERRA. Bloody hell, my wife gets sucked into that a little bit too much, and there's all these random packages that arrive on the doorstep. So I just provide the blokes for you on the doTERRA cult. Anyway, so next one we've got is just a quick hands in the air time, please. So we've just got a couple of different scenarios. Can you please let us know, and this is for everybody, what the maximum LVR and loan amounts would be? And the first one would be for a hobby farm.
Yeah, we can do it if it's not an income producing farm. So yeah.
Okay, interesting, cool. Anybody else?
Yeah, same. We've got a couple of lenders, obviously, that will look at it, but you're looking at a much lower LVR than against normal residential or commercial property security.
Cool, thank you. Ben or Andy?
Yep, so on them, for us out of those scenarios, A, B and C would be a no, just purely because it's business related. For D, again, back to what I was saying earlier, with startup company less than 12 months, we can do one as long as they're a minimum 6 months with their ABN and GST, and we'll give them 150% of the turnover on that mark.
Cool. And then we've got some Airbnbs as well, which I'm actually sitting in an Airbnb at the moment. You can't see it because there's a very sparse single bed, and I thought a nice, attractive FBAA graphic would be better for the professionalism of the morning. But yeah, Airbnbs, anybody?
Yeah, again, if it's yeah, business purpose, yeah.
Cool.
Right now, but if the COVID announcement comes out and the whole rest of the country shuts down, then there'll probably be a pause on Airbnbs for a few weeks. But yeah, typically they're quite actually easy to fund, Mark.
Cool. Thanks very much, mate. Okay, and the last one, it has been noted as well, so I don't want you repeating yourself, Cam, but about exit plans. If you've got anybody got anything else to be added on there? A lot of downsizing is a very popular one, but if there's any kind of other weird or wonderful suggestions about exit plans, that would be appreciated.
No, mate, I guess it's just really, really important in our space, right? Because if people get stuck in short-term lending, it's no good for the broker, it's no good for the client, it's no good for me, the lender. So the exit strategy to us is absolutely critical. Now, whether that's a refinance, whether the property's on the market, whether they've got outstanding invoices that are owed to them, whatever it is, but it needs to be pretty clear. We don't like lending to a cafe and their exit strategy is business cash flow in 6 months' time, because it's sort of Fukuzi for cards. It doesn't really exist, right? We want to see something. We want to see something fairly solid.
Cool. Ben.
Yeah, sorry. Yeah, it's probably more specific for Cam's product, as he just touched on there. We're not really concerned with an exit strategy for our loans, because obviously paid over short term, but we look at their bank statements. So based on their cash flow, we're comfortable they can make the repayments.
Cool. And Andy?
Yep, same again. We're not looking for an exit strategy really, purely because it's a revolving line of credit and over a very short term. Ideally, they will stay with us long term and generate that trail income for the brokers. So no, we don't need to know any exit strategy.
It's just the longevity of the client, I guess, there as well, being a sticky client. And Danelle, anything you'd like to add on that one?
Look, as far as exit strategy, I think the main thing to understand as well is that in this alternate commercial space, as you know, Ben and Andy and all of the other unsecured lenders will attest to, is really just have a look at exit fees. We're really lucky in this alternate space that the majority of lenders don't charge them. So we typically talk about, you know, equity and exit strategy as far as a secured deal. But just be sure to, ask the question or read between the lines or look in the lender profile about exit fees, because whilst lenders may set up loans over longer terms now in this space, that may support the cash flow of the business right now, but in 3 or 4 months' time, they're hoping that their income will increase and may want to pay that loan out early. So it has crept into a couple of alternate lenders. So just be clear, that you ask that question if you think your client is going to want to pay the loan out early.
Cool. Thank you very much, Danelle. Well, look, that wraps up all the questions that we've got for the panel this morning. So, look, thanks very much. And I'll say thank you to Cam and Danelle, Ben and Andy. Thank you very much.
Thank you, legends.
Guys. Thanks for having us.
Awesome. Thanks, Mark. Cheers,
guys.
Bye.
Okay, now next we've got Nicolette Spicer, who's been coughing a little bit throughout the morning, unfortunately. So apologies about the unruly presenters that we've had on all this morning. Now Nicolette's from Assure Counselling, who'll be presenting on easy healthy habits on behalf of Suncorp.
Good on you, Mark. Thank you. And you know what? I actually love it that they're referring to me and my healthy principles. So I'm thrilled that I did see a lot of people on this call drinking water. So thank you for that. And I'll make mention of that shortly. I'll just get my little prezzo up. And just to let everybody know, we've got this awesome program available to all advisors and family members. If you're ever stressed or struggling, we are here to help. It's funded by Suncorp, and it's just a matter of calling this number, which I'll give to you now, 1-800-808-374, and that entitles you to free confidential counselling about anything that is bothering you or that is on your mind. The sessions are really generous. Assure's been around for 30 odd years. We've got 1,200 psychs who work for us. My job is to make it cool to see a psychologist and destigmatise reaching out for support. You are able to assist everybody on this call and your family if you are, having a hard time, maybe drinking too much alcohol, and I'll talk about that in a minute. Maybe you're not sleeping, maybe you're losing your temper, maybe you're feeling overwhelmed or just, like really caged in if you're in lockdown. You can reach out for support. 4 sessions a year for confidential counselling, talking about, anything that's bothering you, and the psychs will help you with the pathway forward. Also have access to wellbeing coaching. So maybe you're not desperate, or maybe you're not at the end of your rope. Maybe you just need, to adopt some healthy tips, and that will help you as well. So I'll share some info there. Plus, you also have free legal advice too, if you ever need it, all funded by Suncorp. The beauty of the wellbeing coaching is that our business is actually, the cornerstone is around positive psychology. So it's taking people from good to great and encouraging people to be the happiest, healthiest, most authentic version of themselves. So my little tips today, the first one is around nutrition, and I cannot emphasize enough the importance of eating well. So the Heart Foundation love them. They recommend 2 bits of healthy fruit. Now I know Leah has already privately messaged me and told me that she's got her 2 bits of fruit and 5 veggies. So every single day, all you need to do is worry about having 2 bits of fruit and 5 veggies. And if you're going to the shops, don't shop when you're hungry. Write a list of healthy food, really good, nutritious stuff that is going to set you up for good mental and physical well-being. Shop on the outskirts of your supermarket. Try not to hang around those middle aisles where things are packaged and things are delicious and easy to prepare, but not necessarily good for you. If you've got your own veggie garden, good for you. If you've got chickens that lay eggs, good for you. So high protein foods, snacking on nuts and seeds. And look, I don't want to be a wowser about it either. Like, you know, a little bit of naughty stuff in moderation is always important, especially when it comes to alcoholic beverages. And I know, look, I'm there with you. I like a drink, but I think we need to, again, abide by what the Heart Foundation recommends in 2 small standard drinks a day. I think for women it might only be 1. Blokes, you get 2 standard drinks. And when I say standard, it's not like how I'd pour a glass if you came to my house for a drink on my balcony. It's smaller. Plus, you've got to have a couple of alcohol-free days in there. Now, if you find that you're drinking too much and it's not optimizing your health, give us a call and we will assist you. Also, it's important to maximise hydration. Now, I've seen today Danelle, Ben and Cam all chugging the water. So if everyone can just give me a cheers, I just want to have a quick spy and see what you are drinking, just so I can judge. Not judge, I'm only joking. There is never any judgment. But optimising, come on, Mark, you need to get yourself a water. You need to ensure you are optimally, okay, no worries, optimally hydrated with maybe a couple of litres of water every day, and trying to steer clear from sugary soft drinks, energy drinks. They're terrible. Maybe, you know, cut down on the caffeine, 1 or 2 coffees a day. And again, just trying to get the water in. So if you take nothing else away from today, optimizing hydration is an absolute beauty. The power of the breath. Now, not encouraging people to go off and do Wim Hof and then hop in a freezing pool or bath or lake or stream, unless that is your bag. But being able to breathe can sometimes just be enough to center ourselves and reduce anxiety, and just help, you know, calm us down if ever we are stressed or, you know, having a tough time. So just give you a quick example. If everyone can uncross your legs, wake up if you are currently asleep during my quick talk, hands on your lap, shoulders relaxed. We're going to breathe in for 4. So just follow me. Cam, I'm watching you. I need to make sure that you are doing this. Yep. All right. So deep breath in for 4. Hold for 4. Breathe out for 4. Hold for 4. Breathe in for 4. Hold for 4. Breathe out for 4. Good work, everyone. So they call that square breathing or box breathing. And if you do that, like a couple of cycles, if you're ever stressed out of your mind or people that you're providing advice to are making you cranky, that will absolutely help you calm down, and it is excellent. Another tip is exercise, a little bit of huff and puff every day, 20 to 30 minutes, and not that you have to engage in the same stuff as Ninja Warrior, which I was looking at last night, but even a little bit of strength-based activity or some stretching. Meeting a mate if we're not in lockdown to exercise with, or find something really cool, an app, maybe a yoga app, but doing a little bit of something every single day. And I think too, you know, incidental exercise is also a great way to go. So instead of sitting down for these meetings, maybe next time we all meet, and hopefully I'm invited back, we could make it a walking meeting. So we're getting that incidental exercise and activity going. Connection is another point. Try and hang out with people who drag you up instead of those who drag you down. I know it's really hard for those people who are just hanging out with toxic people. You've just got to try and have a flexible mindset. Again, you call us, you speak to the psychs, they can assist you with that. Ringing up an old friend or meeting someone who you find funny and engaging can help lift your spirit and your mood. Going device free. Again, I'm guilty of this, you know, trying to get off the socials and looking at everyone highlight reel, maybe one night a week. Whack your devices in the cupboard and get back to having a conversation with your loved ones. Or, you know, instead of scanning through Instagram, put your phone away and have your meal and converse with people that you might live with. Being grateful for things that we have. I know, you know, last year and this year has been really hard and quite overwhelming for many of us, me included. But I think each night before you go to bed, just sort of say, you know, a couple of things that you're grateful for. Maybe reach out to someone and tell them, you know, that they're awesome. A random act of kindness never goes astray, and that's also really good for mental health. Danelle, I love the fact that you're sniffing oils. Not that you have to go down that doTERRA path. Even if you whip over to your neighbours and pick their rosemary or their lavender, I say that because I don't have those plants at my house, but my neighbours do. But just gently reflecting, you know, smelling some nice things, doing a little bit of that deep diaphragmatic breathing can also help centre us. Laughing. Always love coming in on these sessions because there's always a laugh somewhere. Trying to hang out, you know, with the people who, as I said, drag you up. Maybe watching some funny movies, and I don't know if you like Wedding Crashers or Step Brothers or whatever it is that's your bag, but find something that makes you laugh. Again, trying to get that into your life every single day. And if none of these work, we are always here for you to provide support. We are 24/7. It is all private and confidential. No one ever knows that you've reached out for support. So don't dig your head in the sand if you're struggling. We're here for you. Thank you.
Thank you very much for that, Nicolette. I might suggest the box breathing to my wife when I go down and see her when she's working from home at the moment. It might actually help her a lot. So I'll certainly be taking that one with two hands. Thanks very much. Okay, so now next we have our local market update. Now this one's going to be hosted by our SANT State President, who is Joff O'Shaughnessy. So g'day, Joff.
G'day, Mark, and welcome everybody. Yeah, it's as you know, we've heard quite a lot of in the media lately. Everybody is busy. Myself, I'm seeing a larger inquiry in commercial lending and asset finance and even personal loans. So if any of you are not doing anything other than home mortgages, you really seriously need to start looking at that, because the demand is certainly out there. On that, what I'd like to do is welcome Athena Liss, who is on our State Council. This year, there's only 3 of us. There's myself, Athena, and Kim Russell. And unfortunately, we're down from 5 councillors last year. And this is just a call out to any of you members who are thinking that you might like to perhaps, you know, give back to the industry a bit, or, you know, spend a bit of time doing some contribution outside your business. And maybe that could be tie in with Nicolette's wellbeing as well. But we're looking for some additional counsellors. So please, if you're thinking about FBAA as a member, you're obviously joined because you think we're a worthwhile organisation. But if you'd like to contribute a little more, then please think about that, and please give Athena, Kim, or myself, or Mark Windham a call, and just discuss what's involved. It's not a very onerous thing to be doing. So with that, I'd like to hand over to Athena to give us a bit of an insight into what she's seeing in the market here in South Australia today.
Good morning all. Thanks, Joff. As our panel members have advised, commercial loans, personal loans, asset finance is becoming increasing with our clientele. We need to be diversified at the moment because we want to give our clients a holistic approach to all their financial needs. It is daunting, and Donnell, you hit the nail on the head earlier. We all do throw our hands up in the air because sometimes we don't know what to do. We do get some specialised security inquiries, and we do have to become a master in the fact of the knowledge that we've got to have as to where we can go to place all the deals. That's why all these lender options are very important in our daily business. Most clients, especially with commercial finance, with warehouses, offices, want to stay with their mainstream lenders. Most of those loans are only done over the lease term that is there. It does take a long time to get the loans through, but what we have found is an increase in demand to look at like your La Trobe, your Liberty, your second tier lenders as far as doing a 30-year term set and forget loan, which makes it easier for the client rather than every 2 or 3 years having to go back to their own lender and provide the same details, financials, valuations that are required. The rates clients do compare, but if you look at the overall 30-year term and the fact that you've got to roll over your loan and pay for additional valuations, it ends up being almost identical. But again, that's where we come into place in order to give that advice to our clients. I had a deal for specialised security and I spoke to the lend team. It was for a spray booth. And again, that opened up our eyes as far as what we need to do and which lenders are available. And this is where, as brokers, we do need to chat to each other, call our lender panel members who provide the products in order for us not to be scared, but to be able to provide some options to our clients. Thanks.
Thanks, Athena. I'd like to add one other thing, observation really, in relation to what's happening in the market at the moment, and this is reflective of residential lending. There's quite a few lenders out there who are providing refinance cashbacks and other offers that seem quite substantial. But when you look at the service level that they're providing, they're often taking much longer than other panel lenders to provide their loans, you know, up to 30 days in some cases. And I know some of that's improving a little bit, but and a lot of brokers that I've spoken to are going, well, you know, it's all about bid. We've got to provide the sharpest deal for the clients. And I'd like to remind everyone that best interest for the client is not just about their cash. It's about whether they may, if they don't get an approval in time, they may lose the property they're interested in buying. They may, if they've got some issue in relation to cash flow, it may create an arrears problem if a finance doesn't go through in a particular period of time. So you've got to think about outside these lenders are advertising, which attracts your clients to thinking about them first. And, you know, as you would know, most customer or lender conversations with clients opens up with, what's your best interest rate? And we all know that it's not just about interest rate. It's not just about fees and costs. It's about what's best for the client. So I'd really like to remind you all to look outside the mathematics of the thing to see what other terms of the loan, what other situations that the client is in, and what is going to benefit all of those things rather than just narrowly focusing on costs. So I'll get down off my soapbox now, and we'll just run through a few things that are coming up shortly. As you would probably know, nationally, we've got the FBAA National Industry Conference on Friday the 30th of July, which is only 4 weeks away, a little over. That's at SeaWorld on the Gold Coast, and it's a free event. All you have to do is get yourself and pay your accommodation. And if you feel like a few warmer days in Queensland over these next few months, then that's perhaps a good opportunity. Hopefully we don't have anything happen that's going to prevent us from travelling in a few weeks' time. So fingers crossed in relation to COVID. Following that's the Gala Dinner and Awards, which is always a great night, and that's at Movie World on the Gold Coast. I've been attending for several years now, and the day, evening is a great event. It has been every time. Leah, who is the National Events Manager, does a wonderful job with that, and so does the rest of the team. So it's something that you'll get a lot of value from, and really you'll enjoy it as well. Locally here in South Australia, we've got 2 coffee meetings coming up. So watch out for the email invitations to those events. So that's planned for the 18th of August, which is a few weeks after the conference, and then again on the 23rd of September. So please come along. We're finding that as everybody's busy, people are registering and not attending, and I'd encourage you first of all to register, and then please back it up by attending. So looking forward to seeing you all there. So with all that, I'll hand back to Mark to close off the event.
Thank you very much, Joff. Appreciate it. And look, remember, please, all the members that are on the call today, please do know that you do have that local support with Joff being in South Australia and our council underneath that, okay? So please, if you do have any issues, get in contact with him or myself for that matter as well. Now that does bring us to an end of our session 1 today. So we do hope you got a lot out of the information we provided for you to do today. So before we close off today's summit, there are a few quick notes to cover off. We do want to acknowledge our national sponsors again for their time and support. You'll receive their contact details in the email to follow this session should you need to get in touch with them. And please, no question is not worth asking. So even if you think it's a silly question, please do send them through to our sponsors, which will get those contact details. Secondly, you'll be getting the code for the 1.5 CPDs and a short survey in the email too. So please provide your feedback so we can ensure that we're focusing on the topics you want to hear about. And thirdly, there is session 2 tomorrow. That's at 10 a.m. until 11:30. So if you haven't registered for that, please do so on the website. As our keynote speaker, Beck Smith from Wellness and Smith, will be speaking to us about practical strategies for stress reduction. Thirdly, on the 15th of July, there will be a Q&A with Whitey. That will be at 11 a.m. Adelaide time. So that will be with Matt Rodge from RBG Lawyers. They'll be around critical issues within the industry and how they can help you. You can register through the website again as well through that one. There are also other webinar recordings. If you've missed those, they will be up on our YouTube channel, just like this session. If you did miss any of the start of it or anything like that, you can review that at a later date. And that's it from me. So please have a great day for everybody, and I will see you tomorrow. Goodbye.